I thank you very much for tuning in to That Will Never Work podcast. Most people will call losing their corporate job their worst day. So, my guest today, along with his wife, called it the day their real life began. And some of us feel like that's when it finally begins. And that's how they felt. And so, from the ashes of a dual layoff, they built a 7-figure land business by flipping the one asset nobody else was fighting over: vacant, raw, unimproved dirt. And in doing so, discovered that the simplest path to financial freedom was the one hiding in plain sight under everyone's feet. Let's talk about it right after this.
Educate, empower, enable, impact. Thank you for tuning in to That Will Never Work, an award-winning podcast where we share inspiring information and personal experiences related to business and the entrepreneurial journey from those who are leaders in their respective field. Now, here's your host, author and business coach, Maurice.
So my guest today, freedom-driven, practical, resilient, adventurous, no nonsense, purpose-driven, but ultimately grounded, pun intended. So I thank you very much for listening today. Mike, Deaton, thank you very much for coming on to the show.
Maurice, I'm excited to be here. Always happy to talk a little bit about our journey and freedom and entrepreneurship. So looking forward to a great conversation, man.
Yes, sir. Yes, sir. So you and your wife both had gotten laid off at the same time, which, in some cases that doesn't really happen. But instead of scrambling back into the corporate arena, you both looked at each other and made a completely different decision. What was the conversation actually like? And was there a single moment where the both of you knew that the layoff wasn't a setback, but actually the starting gun for the life you were meant to build?
Yeah, it is a impactful moment in our lives. Hindsight's 2020. Listening to the introduction, looking back, it was a point of redefinition and rediscovery in a new chapter. In that moment, it was as you would expect: anxiety, fear, a lot of urgency, even to get it back in the corporate world. My wife and I, we were fortunate in that moment that we were in a good financial place. Like we had a pretty healthy financial situation, money in the bank, bills were paid. We didn't carry a lot of debt. And so we had the opportunity, and it wasn't a crisis moment like it could have been. But that just visceral reaction when you lose your job and then your spouse also loses a job, right. And that was our only income. We had those two income sources and they were gone. Mm-hmm. And so, your savings account all of a sudden starts to go in reverse. And that was my knee-jerk reaction, was I've got to get back in the workforce. And I did. I took steps to, get my resume in order, work my network, reach out to recruiters. I lined up interviews. When I got laid off, I was working with Microsoft, a big tech company. And so I started looking at other big tech companies, Amazon, Apple, Tesla. But what I didn't like with my job was I was in a director position, and I had international responsibilities. And so I was traveling a lot. Not only internationally, but also to corporate. I was living in Dallas, flying up and back to Washington. And so I was traveling probably 50% of the month. The company culture was tough at Microsoft. Like it's a big tech company, and I was in operations, which is very, P&L driven. It's expenses. It's mostly expenses. I mean, we're not the ones making the money. And so it was just a very cutthroat environment. In these companies I was looking at, I was seeing more of the same. Like, you hear stories about people that work at Tesla and the environment there. They were all West Coast companies and most likely going to be some kind of relocation. All of those things just gave me anxiety, and I had a knot in my stomach. And, we were fortunately, as I mentioned, in a good position to be able to step back and listen to that, just to kind of check into the body and go, wow, something's not feeling right about doing this.
Right.
And so in that 2-week period, let's call it, my wife and I were able to pause and really think about the future. Mm-hmm. What is it that we wanted out of life? My wife and I met at work. And so we worked together in the same office for many years before I was at Microsoft. Mm-hmm. And so we had this experience of spending a lot of time together, commuting to work and back, working out at the office and kind of all those things. And so we had already some experience, and we thought we wanted more of that. We wanted to spend time together. We wanted more control over the things we wanted to do. We love to travel. My wife's from Europe, and so we like to go at least once a year and spend 3, 4, 5 weeks with her family, get a good visit in. And none of those things pointed towards a W-2 corporate job. And so we started looking at alternatives. Land was something I had heard of, and actually even invested in a toolkit on how to start up a land business. And so I just hadn't done anything with it because I was a full-time worker. And so that was a little bit the process of the initial reaction to get back in, taking a pause to reflect on what do we value out of life? Mm-hmm. What do we want our perfect day to look like? And that sent us down a different path. And, we can get into all of that, but that was the inflection point really that just sent us down this path of entrepreneurship.
So there's a key element that I really want people to listen to that you're referring to, that you had someone going through the process with you, right? That could understand your journey. Just so happened to happen at the same time. Sometimes, like I said, the stars don't always line up like that. Someone could get laid off one year, then the next person the next year. My wife and I went through the same thing, but at different times. So, unfortunately, in those moments, like you said, it could be stressful, all those type of things. So what was it like for you to really have that individual to at least talk to, let alone understand what you might have been going through internally through this journey?
Yeah, it's a great point that you call out. I mean, we have, ever since that moment, even had each other as business partners and been able to help each other through the highs and lows. And, if one's down, the other can pick each other up. But yeah, in that moment, it was really, I would say, fundamental to being able to do it. Mm-hmm. First of all, to just have the support of your partner and spouse, right?
Right.
It's hard if you have a conflict in, somebody says, I don't know about this. I think, the safer play is to get the job. Another thing, it was quite the opposite. Ligia, my wife, I mentioned she comes from Europe. She has a different upbringing. She had a different outlook on work and finances. And even like my sense of security has always been rooted up to that point in a salaried job, benefits, all of the things that are kind of seen as normal, or at least have been seen as normal in America. That was my comfort zone. Mm-hmm. But in that moment, you and I were talking a little bit before the show, like I have 2 older daughters. They, at that point, were at the moment where they were going to school. And so we didn't really have that to consider as far as, it wasn't 4 of us that I had to provide for, that we both had to provide for. It was the 2 of us. And we could take a little more liberty with that sense of security and be able to do things. But yeah, being able to talk through, to dream and to vision and to make goals and put things out there, that was really, I probably, if I had not had Ligia in that moment, I most likely would have gotten back and gotten a job. But she was very open and encouraging that we should try something, and really supportive in terms of taking a different path in life. And thankfully so, fast forward, everything's just kind of worked out in a dream case scenario.
Nice. And so because y'all, as you're stating, it's a different path, right? So now you're going into this place of entrepreneurship. And again, when we think about real estate, we think real estate, normal path. We're going, it's either going to be residential, it's going to be commercial, it's going to be apartments. you hear all these gurus say, hey, in order for you to make money, you need to have 21 units, and like it's all these magical things that you need to hear out there. But you went a totally different path, you know, and if someone says dirt, quote unquote, what does that look like and feel like? Because I remember looking at a TV show, I think it was called, a movie, I think it was The Pianist or something like that, where in that movie, the guy pulls up dirt. Like, he's like, there's a difference between dirt and soil. One you can grow, one you can't. And so I'm just using that as an analogy because some people might not look at that as an opportunity to grow out of that. So can you please explain that to us?
Yeah. It is an underlooked asset class, if you call it an asset class. But I teased this a little bit earlier, but a bit before the layoff, I had revisited Rich Dad, Poor Dad, which, you know, so many people are familiar with, especially if you have any real estate background. But Robert Kiyosaki, he wrote this great book with a lot of very simplistic lessons. But at its core, it's about people that work for a living, right? You have an employer, you get a salary, you pay taxes, as long you're trading your time for money.
Right.
Versus people that leverage capital, their assets, and build income streams or assets that produce money so that you're not trading your time for money. And it awakened this concept that, gosh, I should look at other types of income streams. And so I started listening to podcasts like this and other ones where, you know, you hear people talk about things they're doing. And I had heard a couple of different episodes of people that were trading land, that were land flipping. And so that already planted the seed. But like I said, I was working full time. I'm kind of an all in person. Like if I'm working for a company, I'm giving it my all. Right. And I'm not doing something on the side. I would have felt guilty even, I think, if I would have done something on the side. But so we had that idea and even a toolkit on my office desk of how to do it. For people that haven't heard of it, at least the way we run the business model, it's basically pricing arbitrage. Like, we are reaching out to property owners directly. We are making them a lowball offer. So maybe 40 cents on the dollar. So we'll come in at 35 to 45% of what we understand the market value to be. And out of, 1,000 offers, we'll get maybe 1 or 2% of people that are okay with taking that offer. And there's a handful of reasons that people are okay. We can get into it, but essentially we're acquiring properties well below market value, and then we can just resell it for a profit. We don't have to make any improvements. We don't have to subdivide. We don't have to build on it. Similar to house flipping, you don't have to do any type of renovations. There's just no complications. You're just looking for the deal. And once you get the deal, we turn around and resell it. And we resell our properties in a couple ways. One is just a standard cash deal like you would think about. Somebody buys a property, the deal's over, we take our profit, and we move on. We do a lot of owner financing, and so we'll carry the note for people if they want to finance over 5 years, let's say. And so we've built up a passive income stream, if you will, or monthly recurring revenue that comes in, and it's a bit like a passive income stream at that point. That's kind of been our strategy, but that's the model in a nutshell. It's really just buying property below value. You don't even have to buy it, much like in the house market. I mean, you can trade the paper, you can get something under contract, find a buyer. I mean, there's different ways to go about it and nuance, but at its core, it's finding a deal that you can get under market value and then reselling it. And it's just so easy. I mean, we've done a lot of other real estate. We still do to this day. We work in apartments and we do some other things. We put our cash flow into other assets. They all come with so much headache. Like, it's just, we do 90% of land deals just because it's, I have a bit of gray coming out already, but it keeps some of that gray at bay. Right.
I mean, and here's the thing. I mean, I want people to hear something that I think some of my listeners are dealing with, because you went over it, but you just didn't give it the word that you have given in other episodes. I want y'all to really do your research on Mike. Great content out there. but there's a word that he had used in another podcast. It was called loyal, right? And in that, sometimes we get caught up in being loyal to tradition. I'm gonna say that word tradition because sometimes we get caught up in that and we don't know how to break out of it. We don't understand what it really looks like to maybe divvy off the path just a little bit. So again, you hear these people that talk about real estate in this one sense. You're really coming at it from a different perspective. So what has been the outlook that you've been given or getting back from your perspective of just looking at something as simple as dirt?
Yeah, well, simplicity is the key there. I mean, for me, let's just talk about maybe a multifamily deal where I've done several, but they are so, even the analysis of a multifamily deal is super complicated, right? I mean, you have a lot of moving parts in there. You have rent, expenses, property insurance, all kinds of lending rates. I mean, I've underwritten 100+ multifamily deals, and it's super intricate. And each of those variables, you're making some kind of an assumption, like, okay, rent's going to grow maybe 2.5% in average. Land is nothing like that. It's essentially we go in and we look at market comps, which are much easier than residential comps, by the way. If it's a 5-acre property, you're looking at similar 5-acre properties. Ideally, what has been selling. If you can't find that, you look at what's listed. But there's no other really factors coming into play. Our deal average cycle time, we're looking at weeks or maybe a few months. Like we're moving properties fairly quickly. And so the market's just not moving that quickly. And so you're less subject to price sensitivity. And so it's just real simple if we know we're getting a deal, we're getting a property under market value, we know there's a profit. We don't have to worry that we're going to tear down a wall and there's going to be termites or mold or some surprise that we didn't see coming. Right. There's just none of that. And so the simplicity of the business model really is what lends itself to the large profits. I was just looking at our deal history this morning, and over 10 years, we've gotten a 3x equity multiple across hundreds of deals. And we've never lost money on a deal. Unlike in multifamily, I have lost 6 figures in deals that didn't perform. And it's a night and day difference. And it really comes down to that simplicity that drives the success of the business model.
And so, what you're saying right here is why I brought up the loyalty idea to a traditional mindset. Right?
Yeah.
Because sometimes we get so caught up in that where we no longer see opportunities
right.
that are literally laying in front of us. And so no different than what you talk about with the book, right? Rich Dad, Poor Dad. What was the mindset of both fathers, right? What were the mindsets of the children? Those type of things. And how do you break yourself out of that traditional cycle, which is, and so based off of like the podcast, because I wanted to do something different. My family told me that would never work. That's the reason why I was named this, right? And so how many times have you been told, Mike, I'm not sure about that, let alone how many times have you told yourself that as well? So sure. just talk about that a little bit as well.
Yeah, I mean, I'm sure your audience really, really resonates with this. But anytime you try something, that's one of the core reasons I love the Rich Dad Poor Dad book is exactly that mindset. Like you can feel throughout the book this instilling of, how can I make this work? What are the creative opportunities to do things? That for me was just a fundamental, awakening there. But I was recently on another podcast. We were talking about the transition from employee to entrepreneur, and one of the things that came to mind on the podcast I had never really thought about, but like in that moment, my wife and we started our business. And we moved from Dallas to Colorado, and my whole family is in the Dallas-Fort Worth area. All of our friends and network was in the Dallas-Fort Worth area. we knew almost nobody we moved close to Boulder, Colorado. We had like one acquaintance, which is kind of why we moved there, because we'd been there. But I think that was fundamental to us being able to be free to explore this new path and not have naysayers so much talking like that. I can't say that anybody said that will never work, but you feel it, right? People kind of give you the look, or they're like, "Wow, what are you doing exactly?" Especially land flipping.
Right.
Like, I don't even understand what this is. What are you going to do? How are you going to survive? And so, yeah, my parents and our core friends were definitely challenging this notion, and I think behind the scenes, for sure, they were probably thinking this is never going to work. But it is something that everybody deals with. We faced it, as to your point, like we definitely had the doubts throughout the journey. I mean, we both got laid off in 2016. It took us a few months to figure out land was what we wanted to go with. We gave ourselves some seed capital to fund the business, and we said, let's give it 12 months. And, if we see progress, if we think this can work, we'll go. If not, we will pivot. And some of the things that we have done in land, but also in other pursuits, is we tried to plug in with a community of like-minded individuals. And so we got proof points that, okay, other people are making this work. There's no reason that we can't do it. And then you get your first deal, and then your second deal, and that confidence starts to stack. But it took us about 5 months, I would say, from when we pulled the trigger and said, let's go, to when we went full cycle on our first deal. Neither one of us are salespeople. It was kind of hard to crack the marketing and sales side of the equation for us. And so that period was full of doubtful times. Is this going to happen? And we still face it. Like you do different things, and the market cycles up and down a little bit, and you think, oh my gosh, it's, especially if you're outwardly focused, you see other people going, oh, it's the crash. Things are going to, but you have to keep executing. And that's what we do. We just, there's certain things like offers. We make sure we are consistently sending out offers and keeping our pipeline full of deals, marketing properties and sales. It's just, there's little things that if you just make sure you're doing those daily or weekly or whatever, things are going to happen. But to your point, you can't get tunnel vision that the way it's happened for the last 10 years is the way it's going to happen going forward, right? You have to be open to what's happening, AI, technology, different business models. I mean, that's how I worked for Nokia mobile phones, and you might remember Nokia mobile phones, but some people maybe don't. But Nokia is a classic example of a company that missed out on a major trend, right? I mean, Nokia was a flip phone king, all this stuff. And then when the iPhone came out and it was a touchscreen single bar phone format, Nokia missed the boat. And, the phone business of Nokia has gone out of business. They're still doing other things, but it's exactly that point, right? You can't be closed-minded, especially in today's world where things are moving so quickly in some aspects. In the land space, I mean, land is not necessarily changing. There may be use changes, or there are different ways to reach out to owners and to do some of the processes, but the fundamental business model stays the same. But yeah, it's a, this loyalty or this, tunnel vision of staying in on one thing can definitely be a detriment to your business and your business growth. And
I think, so you talk about Nokia, it makes me think about BlackBerry. Same vibe, right? BlackBerry felt like it was one of those phones everyone needed to have.
Yeah.
Even the walkie-talkie one, Sprint, right? All those other phones that or those brands or plans, they felt like they had it on, all figured out.
And it's just getting faster, right? Because you see, like, even with these AI companies, every week somebody's dropping a new feature set and everybody goes, oh, this is the new platform that everybody's going to go to. And it's just iterating so quickly that you almost can't keep up. But it's good to stay at least open to certain things. The whole switching thing, I mean, that in and of itself can also be a detriment if you're shiny new object, right? If you're going from technology to technology or process to process. I mean, at some point you got to stabilize, pick a path and go. But it's a fine line and a balance as an entrepreneur to know when to double down on what's working and when to try something else.
So, my last little point is if we pay attention to everything that's going on, in all honesty, everyone's offering the same features. It's just packaged differently, right? And so even for what you're doing, being a real estate, it's the same thing. It's just packaged a little differently. And it's the way you view it. It's the way your wife, views it. Your team that's around you, people that might be influencing you. So it's just the way that's being brought to you. And so for those individuals that are looking for a different way of getting things done, a different way of talking about it, speaking about it, because Mike, you really seem like you enjoy what you do, bro. I'll be honest with you. So where can they find you and talk to you and find your content and all that type of stuff?
Yeah, thanks for that. I'm active on LinkedIn. They can find me there. I post daily, a lot of land-focused content. I have been increasing my YouTube presence. You can find us at Flipping Dirt on YouTube. And then our website is flippingdirt.us. I've put a landing page out there, flippingdirt.us/freedom. And it's really intended for podcast listeners to go. There's a few informational products that people can grab for free. My contact information is there. If somebody wants to set up an appointment and talk about how and if this might work for them, I'm always happy to chat and see if it's a good fit for somebody. And so, those are probably the best avenues. And if I had to steer one, it would be the website, flippingdirt.us/freedom, because you can get it all right there. But try to give a few different ways. I've also got a couple of books out there, Flipping Dirt title. One for people that don't have a lot of capital, and one that's a little more about our story and our business model that we run. So, trying to put it out there. I know people like to digest content in different ways.
Now, I'm sorry. Real quick question. It just popped up in my head. So the idea of flipping dirt. Would you say just an idea? Does it differ between one level or one place of the country versus another, being in the United States? Have you seen people's viewpoints towards it differ in different regions of the United States?
Yeah, a great question that I get asked all the time, but one of the great things about flipping dirt is you can do it anywhere. We buy and sell land all across the United States. We do a lot of Colorado land just because we love it, but unlike a house or a structure, you don't have to have boots on the ground. You don't have to walk it. You don't have to inspect it. There are online tools that can give you everything you need. And so if you live in New York, you can look in Florida, you can look in Arizona, and vice versa. But one of the first things we do when we help clients get started, there are different types of land, as you can imagine, right? There's suburban, there's city infill lots, and there's rural properties. And so there's different ways to make the model work depending on how much capital you have or what business model you want to look at. And so that is a little bit of a nuance there. There's just a lot of different ways to go about doing it. But location independent, which is one of the things that we really love about it, because we don't have to shop in our local market.
Nice. So I'm asking this because this is going to lead us into our question. Would you rather, right? So A lot of times we don't know whether or not we want the door method or the road method. So which one would you rather choose? Would you rather choose 3 doors or a fork in the road?
Man, I'm probably a fork in the road guy. Like decisions are tricky for me. And so the more decisions, the more analysis paralysis I can get. I listened to a podcast with a guest. Her name is Dr. Ellen Longer, and I'm assuming she's written some books. But in that podcast that I listened to, she had an amazing quote. and it took me a while to kind of get this, but she said, don't focus so much on making the right decision in life. Take the decision and make the decision right? Because you're never going to know. You can't walk both paths. Mm-hmm. And so at some point, you just have to pick the path and then tell yourself this is the right decision, because you never know what that other path was going to take you down. And so I just have tried to embrace a little bit more of that, because I'm a person who struggles with certainty. I like to know before I step down that fork, where is this going to take me?
Right.
But, we don't know that in life many times. And so, there's some military quotes, I think, about just getting to 70 or 80% of the information and then take the decision. And so I entrepreneurship has really been that growth path for me, because whereas in the corporate world, failure is failure.
Right.
In the entrepreneurship world, failure is data, right? You're out there, you're iterating, you're testing, you're failing fast, and you're adjusting. And so that has been for me a fundamental mindset shift that I've really had to work on and improve over my entrepreneurship journey. But I'll take the fork, man.
And I like that. I mean, and even with that quote, I think what happens is that we're looking for perfectionism. We're chasing that, and everything in order for, and every time we do that, sometimes, I know I'll only speak for myself, it causes hesitation, procrastination, and so I might not ever really get to that level that I'm really looking forward to.
Tony Robbins says perfectionism is the lowest form of standard, because of those reasons you just pointed out, right? It leads to procrastination. It leads to not taking action more times than not. And I definitely struggle with that. And I have to, that's, things that I have to work on as a human. Yeah.
I work on it every day. I'm going to be honest with you.
Yeah.
I work on it every day. But I thank you very much for coming on the show, Mike.
Maurice, it's been a pleasure. I really had a good time, and hope some people got some stuff out of this, and look forward to chatting with anybody that has an interest.
And, of course, y'all, all of you know, I don't care what you're doing, you're hiking, biking, canoeing, whatever it is, Mike's information will be in the show notes, so it will be there when you get back, all right? So I thank y'all very much for listening today. And, of course, I'm going to leave y'all with a challenge as usual. Write down the specific lifestyle you are building your business to fund. Not vague goals like financial freedom or more time, but be more specific, vivid, and scheduled details. What does Tuesday look like? Where are you living? Who are you with? What are you doing by 10 a.m.? But if you cannot answer those questions with specificity, your business does not yet have a destination. And a business without a destination will always optimize for the wrong things. Define the life first, then build the business that funds it. I thank you very much for listening today, and I'll talk to y'all just a little bit later.
Thanks for listening. Follow Maurice Chisholm on social media to stay connected, and check back weekly for new episodes. Until next time, that will never work. Or will it?